I got into Bitcoin because I needed it. I needed it, and I was looking for it everywhere else. I was looking for it in the gold market. I was looking for it in the real estate market. I was looking for it in the stock market. I was looking for it everywhere. If you really want to own Bitcoin truly, you have to take self-custody. And taking self-custody is actually going to make you understand Bitcoin better.
Awesome. So today I have the pleasure of having RK join me on the show. RK, thanks so much for taking the time to be here.
Thank you, Stefan, for inviting me. I'm really excited. I'm really excited about this conversation, and I'm sure we're going to talk a lot about Bitcoin.
Yeah, definitely. So as I was preparing a bit for this podcast, actually, what struck out to me about your profile and your background, let's say specifically, was that before we'll get into 21st Capital a bit later, but before starting 21st Capital, you had quite a extensive background in, let's say, traditional finance. So I'd love to hear a bit about your background there, and then maybe how that also kind of built the foundation to understand and then get into Bitcoin as well.
Sure. Yeah. So I basically started to get into finance in '07. It was actually '06, almost '07. And it was the beginning of the financial crisis. And I was still very young. So I didn't understand much, but it was pretty much the best time to actually get into finance because there was so much to learn. And from there, I just worked in different departments. We were basically in the trading department. We were offering all sorts of brokerage trades for individuals, but also corporates and liquidity providers, banks, and so on and so forth. And mainly in currency markets, futures, options markets, and mainly OTC markets, but we had also futures and exchange traded securities that we were dealing with. And from there, I pretty much traveled and worked in lots of places. I've worked in Germany, I've worked in Dubai, I've worked in Switzerland, I've worked in Liechtenstein, I've worked in a lot of places. And it was mostly with a single company that I worked with, but I've also hopped into other banks, mainly smaller banks. And yeah, this is what I did. So I actually observed a lot of people trading with us. I was sitting on the other side of the table. So I was very well prepared when I got into Bitcoin that trading is pretty much a dead end and a bad idea to go for. So yeah, this is my background, purely finance guy, and I did that for how many years? I think it was, yeah, pretty much until 2020. Yeah, but I got into Bitcoin earlier than 2020. I got into Bitcoin in 18, November 18, actually 17. And when I got really serious about it, it was already end of 18. And yeah, and that is my background. But that's not the reason I got into Bitcoin. The reason why I got into Bitcoin was a completely different reason, but we can talk about that later.
Yeah, no, we'll definitely dive into that a bit later. I'm curious also from your perspective. So you're working in traditional finance. I think it's always interesting when I talk to people who do have more of an experience in the traditional financial realm, let's say, because I think oftentimes what you notice now and still is the case, maybe less so now, but especially if, years ago, is that typically even traditional financial people who are kind of ingrained in that system sometimes are more reluctant to adopt or understand Bitcoin because they're used to a system that Bitcoin is so, let's say, outside of. So for you, when you were working in traditional finance, how was it for you? What was your experience like working in these corporations? And a bit also what you touched on was kind of the trading aspect of it, but I'd love to hear a bit more your perspective on, that experience and how that maybe factored into, I don't know, for you, for example, if it was something like, oh, you noticed that there were certain flaws or errors within the traditional financial system that then led you to be more convinced once you discovered Bitcoin, or how was that experience like, let's say?
Yeah, so I actually did not understand the financial system before Bitcoin. I thought I do,
Mm,
but I didn't. And it, I realized everything that I know today about my time back then later after Bitcoin, which is quite fascinating because Bitcoin takes you down a rabbit hole to know more about yourself than you do actually about anything else. And I actually learned about myself after Bitcoin that I didn't know anything about finance, that I didn't know anything about money, that I didn't know anything about investing, that I didn't know anything about the monetary system and how the financial world actually functions, right?
mm,
And you know, so your question is about my experience with the traditional finance and the system. So the the thing that I realized after Bitcoin about my time was that I constantly had to do something I don't like, I did not really believe, and I also had to lie about, right?
okay.
And I realized after Bitcoin why, and it's very simple actually, once you realize it, it is because the system at its core is based on quicksand and it has flaws in its unit, right?
Mm-hmm.
So if you have a financial system where its unit, which would be the dollar, for example, or the euro, is leaking energy, like Sailor always says, right? Because they keep printing money, right? You have all sorts of distractions and all sorts of distortions in the market. And this causes a lot of speculation and it causes people to actually not think long term and to actually align the incentives in a way that the banker who actually has a business around this monetary system is incentivized to lie, right? We were incentivized to lie. And the reason why we were incentivized to lie is that we actually were able to capture profit when clients lost money, right? So the way it works in traditional finance is when you offer trading to companies and to individuals, I don't want to get into too much detail, but think of it this way. So there is a broker, and the broker is basically taking your trade, and either he covers that trade or hedges that trade with someone else, or he takes the trade on himself, right? So for example, if you exchange euros with dollars with me, either I give you the dollars for your euros, or I go and buy the dollars, put my commission on top, and then sell you the dollars for your
Mm-hmm.
euros, right?
Yeah.
And most of the players in the banking system, actually all of them, right, cover most of these trades, quote unquote trades, on their own,
Mm-hmm.
which means, let me boil it down for you. For example, if you, for example, have an account with me, Stefan has an account with me, a trading account with me, and you want to trade the euro versus the dollar, and you want to take leverage on it, and you have $10,000 on your account, and you actually want to make quick money. So what you do is you 10x leverage, and you buy $100,000 instead of only 10,000. Even though you have only 10,000 on your account with me, you can actually lever and go 200 or 100,000 euros versus dollars, and you exchange that amount into the other currency in the hopes that the currency you bought will gain in value against the currency you sold, and then you exchange it back when you are in profit, hopefully. That's the idea of trading currencies, right? at least forex trading, right? So the problem with that is that the moment you take leverage, the odds of you losing are already against you, right? And the reason is just probabilities. You can just create a spreadsheet and calculate the probabilities. The probabilities are against you. Why? Because you do not have $100,000. You have only $10,000, right? And the more leverage you take, the more risk you have, because as soon as the market starts to move up or down, for example, if you have only $10,000 and the euro dollar market goes from 1.01 to 1.1002, you gain $20. But if you have levered up to 100,000 instead of 10,000, so 10x, it's not $20, it's $200, right? So it's 10x than that, right? So your risk is higher because you've taken leverage. And as long as the market goes in your favor, everything is fine. But as soon as the market goes against you, you don't have 100,000 on your account. You have only $10,000 on your account. The market is going to eventually move against you at some point, and you're going to get stopped out, and you're going to lose all of your money, right? You may make some money at some point in the short term, but over the long term, if one trade goes against you, most people don't stop their losses. They let their losses go and they take profits. So what happens is most people, statistically speaking, over 95% of people lose everything in forex trading. Everything they put in over the long term, right? And these are the odds against you. So the leverage and everything. So the banker or the broker knows that. And what they do is, instead of letting you actually trade and passing your trade, they know that the probability of you losing the money is very, very high. So instead of passing your trade to another market participant, to the liquidity market, they take it on their own books. Which means if you buy the euro dollar, I sell it to you and I bet against you. And you're my customer, right? So if the market goes up, I have to pay you from my pocket. But if the market goes against you, I'm going to take all your money because you lost. Right? So that's the game. So I make money if you lose, and I lose money if you make money. But the odds are highly against you, so I'm gonna take that bet. Right? So that's what they do. And unfortunately, all the incentives are aligned in a way that you actually provide knowledge to the customer that the market could go to some direction that you believe it is going to, but you have absolutely no clue where it's going, because the variables of the market are so intensely high, so overcrowded, especially when it's about currencies, right? Because you're not dealing with a stock, you're dealing about a country's currency, and there is so many layers of influence over that currency, and calculating them against each other is even more unpredictable because of all the variables, right? It's unbelievably difficult, if not impossible, to predict the market, right? It's very, very difficult. And long story short, this is the predicament of every banker. You're incentivized to lie. And when I learned about Bitcoin, it changes the rules, right? Because the monetary base is fixed.
Yeah.
And you all of a sudden don't have a monetary base that keeps expanding and changing from a central bank like the euro or the dollar, right? You have a monetary base which is fixed, right? And no one can change that. There is no one that you need to trust. No one, right? And then you add the other currency to value it, which is the dollar or the euro, which does expand in perpetuity, right? And this is the reason why Bitcoin keeps going up, or actually the other currency keeps going down against Bitcoin because Bitcoin's supply cannot change over time. It actually decreases over time. And this is the moment you realize that, or I realized that everything I was doing was highly, highly unethical. And it was actually profiting from people's gambling desire and nothing but a scam, to be honest. But, many, many bankers are within this scam and they don't even know that they're within the scam, right? Because they're incentivized to lie, and it is actually legal. There's nothing illegal about this business, right? And there's so many things that are legal, but they're not ethical, right? This is one thing. Providing people with gambling tools is not ethical, in my opinion, right? So I learned that through Bitcoin, and it made me realize that everything I thought I know was absolutely wrong. And Bitcoin actually fixes this because it takes out the incentive to lie, and it takes out the incentive to actually speculate. We have a lot of speculators in the Bitcoin space for sure, but this is purely because it's actually a tale of the fiat phenomenon. It's not because of Bitcoin that we have speculators in the Bitcoin space. It is actually because of fiat that we have speculators, right?
Yeah. Oh, definitely. Well said. And it's fascinating to hear about that experience. And you're exactly right. I don't have experience in traditional finance, but I know that a lot of it is perverse and unethical in a lot of ways, right? You're essentially, because people are, in a way, it's gambling, but also in a way, you're kind of forced to gamble with your money, because if you just leave your money on a bank, you're losing anyways because of inflation. So people are forced to take this melting pile of cash and try to do something with it, and then people try to gain off of that. And so like you said, once you then discover Bitcoin, it kind of flips everything on its head, right? And when you initially discovered Bitcoin, what was that? Well, first I'd love to know kind of like how you discovered it, and what was that initial deep dive like once you started to learn more about it?
Yeah, so I got into Bitcoin because I needed it. I needed it, and I was looking for it everywhere else. I was looking for it in the gold market. I was looking for it in the real estate market. I was looking for it in the stock market. I was looking for it everywhere. And I'm not talking about Bitcoin, the asset. I'm talking about Bitcoin, the solution, right? I was looking for a solution to preserve my capital for the long term, and that I don't actually have to trade or take a lot of risk. I actually had the responsibility to preserve my wealth in something that can actually gain in value over time and not lose. Because I did understand that keeping my money in dollars or euros is not going to work. That part I knew, but I didn't know what to do with it, right? So I tried real estate first, and I got into real estate, and it was the worst experience of my business career. It was the worst. I had to know so much. I had to take care of so much. I had to pay attention to so many things. I had to take so much risk. I had to pay so many lawyers. I had to pay so many accountants. I had to pay so much in fees. And I had to take care of tenants. I had to take care of repairs. I had to take care of so many things just to preserve my capital, right? And thankfully, COVID came and destroyed that business model, because I was planning to buy properties and rent them out through an Airbnb business model in Portugal. And after COVID came, I had some Bitcoin, and, I did understand a little bit about Bitcoin, but, I was like, I'm not going to put all my money into Bitcoin. It doesn't make any sense, right? It's too risky to put everything into one place. So I'm going to diversify. So I had some Bitcoin back then, but I was not a fully orange-pilled Bitcoiner. Let me put it that way. So after this experience through COVID, I really, and I also had tried gold, and maybe I will explain to you a little bit about my gold experience. So after buying gold, I realized that I have to store it in a secure place, and it's physical. I cannot actually take it with me anywhere. And I had to, basically, if I needed money and I wanted to sell it, I had to sell it all. I could not sell part of it. This literally, this experience, because we always tell people like gold is not divisible, and it's like, okay, yeah, it's not divisible. Okay, now I know. But when you experience it, when you actually buy it and you want to get rid of it, you experience that it's not divisible. It's so difficult to get rid of it. And then you have to pay the broker to buy it from you. And I also had some silver shit coins. And those coins, when I wanted to sell them, I went to the dealer, the same dealer I bought it from. And they were in these cubes, you buy them as coins usually, right? Like bars are taxable and they're not very, very advised by brokers. So they tell you buy the coins, buy the eagles and stuff. So you buy the eagle, and then they give you those cubes of plastic that you put them in, or they give it to you in them. And, I had some safety deposit box at this dealer shop, and I had to put it there. So first of all, when they delivered it, it was a box this big, right? And it was heavy as hell. And I was like, and it was, I didn't buy much, I was like, I bought gold, and I was like, let me buy some silver as well, right? Because all the gold bucks, they say buy gold and a little bit of silver. So I was like, let me buy some silver as well. So I bought $10,000 worth of silver and coins. And the guy pushed the drawer, like they have this safety places. They talk to you through a safety window, and then you pay them, and then they give you the silver in a container this big, and he puts the drawer out and he's like, there you go, there's your silver. And I'm like, okay, thank you. And I try to lift it, and it's like so freaking heavy, and now I have to think about, where do I store this, where do I actually store this? So yeah. I go to the basement and I try to store it in my safety deposit box. It doesn't fit there properly. So what do? I take the coins out. I'm now going into details so people understand.
No, yeah, but it's a good story. Yeah.
Yeah, it really is a good story, because people should understand why we say these heavy metals are not a good store of value. So I take them out of those boxes and I put them in this drawer. I leave. Now, a year later, that was 2019, I think. Yeah. Or no, 2020 actually. Yeah, 2020. It was still 2020, like right before COVID came. Then I go down the Bitcoin rabbit hole. I get more orange pilled. I'm like, I have to get rid of the silver. So I go back to this dealership and I want to sell my silver. And then I go to the basement and I take these coins out. And then I go to the same guy that I bought it from. Same place. I did not even take it with me, right? And I go to the same guy and I'm like, here you go. I want to sell it now. He's like, so first of all, the gold I gave him, he said, yeah, you cannot sell part of it. I was like thinking I will sell maybe half of it, and the rest I will buy Bitcoin. Still not fully orange pilled. And the guy says, no, you cannot do that. So you have to sell everything, and then you have to buy back half of it. So you pay twice commission. We cannot buy half of it from you. We cannot give you half a bar and take the entire bar. That doesn't work. So you sell everything and then we give you half back. And I'm like, no, I'm going to sell everything and I don't want any gold back. Thank you. Okay, here's the gold. Now, what about the silver? And he's like, okay, the silver, show us the coins. I show the coins, and can you believe it? He takes the coins and he says, where is the plastic box? And I'm like, what do you mean? Which plastic box? He's like, the cubes that we gave you when you put them in. I'm like, I didn't have space for those. I took the coins out. And he's like, you took the coins out. Yeah, but the value is not the same now because you took it out there and it showed some scratches on it. So it's not going to be as valuable as you do. And I was like, are you serious? He's like, yes, of course I'm serious. you should not take the coins out. I'm like, nobody told me. And I had a conversation with him for over an hour that I should actually get paid the same amount. Like I should not get a discount, or it should not get discounted because I took them out. So after 1 hour, he was convinced, and he inspected the coins, and he's like, okay, they're fine. I'm going to take them from you. And I'm like, great. So we're done. He's like, no, I have to check each coin and verify them one by one if they're real or not. So he took this device and he checked each coin. Can you believe this? There were a lot of coins, right? He checked each coin that he wanted to buy from me, that they're valid, and it took another 1.5 hours. I was waiting there. 1.5 hours. And, horrible experience, horrible. And then I cashed it out at a loss, obviously. I bought them for 10K and I got back, I think, 8K. And I bought Bitcoin with it, and it 10x'd after that with Bitcoin. And I kept a few coins. Now listen, it's not finished yet. If it takes too long, just interrupt me. Sorry.
No, but it's good.
Yeah. So I took a few coins with me, just like, I'm going to keep a few. I was still not fully orange pilled, right? I was like, come on, let me keep a few silver coins, right? And I was, back then I lived in Switzerland. I lived in Switzerland, and I bought these coins not in Switzerland. I bought them somewhere else outside of Switzerland. So I take these coins with me and I go to Switzerland, and I'm at the border in the airport. And guess what? The customs stops me and says, please open your luggage. And I'm like, sure, no problem. I'm going to open my luggage. And they search for my luggage and they find these coins. And they're like, where is this? I'm like, they're silver coins. He's like, where did you buy them? And I'm like, I bought them here and there. And I showed them everything. He's like, yeah, did you pay the taxes for them? I'm like, which taxes? Like, you have to pay taxes for silver that you import into this country. So I had to pay a penalty of 600 francs for a few coins that I had to take with me to Switzerland, right? I paid it, sold it, bought Bitcoin with that as well. So this was my story with precious metals and with real estate. And through all of these experiences, Stefan, and all of the things I studied about Bitcoin, reading all these books, listening to so many podcasts like your podcast and others' podcasts, and understanding why this thing is actually solving this specific problem, that all we actually want when we attain wealth is we want to put it in something that is not censorable, that no one can take away, that we can transport everywhere we want, that we can actually do you still see my picture?
It blurred for a second. Yeah, I don't know if that's just the recording or.
I'm not sure.
Because sometimes it'll blur.
Now it's back, right?
Yeah.
Yeah. Sorry, it was my camera that was flipping. So so maybe you can cut this part.
Yeah.
So after this experience that I had through all these things, I realized, wait a second, all I want to do is to actually preserve my capital. And all I want to do is to put it in something that doesn't take my time, that I don't have to deal with lawyers, that I don't have to deal with tax accountants, that I don't have to deal with tenants and repair companies, and that I don't have to deal with customs. And none of that. I want to be able to store it anyway, like in my brain, even if I want. And I want to, I want to have something that no one can censor, but no one also cannot dilute, right? No one can just make more of, right? And this was the conclusion. And I hate the word conviction that people use in Bitcoin, because it's not conviction. It is conclusion. It is common sense. If you study everything outside of Bitcoin and you understand that nothing else solves this problem, it is a conclusion that you get into Bitcoin, that only Bitcoin solves this specific problem of storing your wealth for your future self and attaining absolute freedom and sovereignty with it.
Yeah. No, I can't agree with you more. And I think that's why this story was so interesting, because I think a lot of times when, Bitcoiners, because most Bitcoiners, it's most Bitcoiners that I talk to, they're all in, right? It's not like, oh yeah, I have some Bitcoin. It's like, no, I'm most of, if not all of my wealth is in Bitcoin. And it's not for being reckless with your money. It's because exactly like your story, people have tried and tested other methods, whether it be real estate, precious metals, stocks, whatever it may be, myself included, where you try these things and then it's almost like the more you learn about Bitcoin, the more you understand that, like, wait, why would I have my money in any of these other areas when this is by far the superior asset to hold? And so it's through this, like, and that's why your story about gold and silver was so interesting, because I don't think a lot of people realize it until you kind of like you did, right? You actually tried to preserve your wealth in some of these areas. And then through that, you realize the struggles that come with it that then Bitcoin solves.
They're inefficient. They have so much friction. They have so much costs involved. You don't own them, actually. You own them on permission of others. You don't own the real estate, even if the state, country, that territory tells you do, you don't, because you are on their permissioned territory, right? And this is so hard to believe, that actually you can own something that it's completely permissionless. This is what we mean when we say Bitcoin is permissionless. It doesn't only mean that opening a private key or generating a private key doesn't require permission. It also means that owning the Bitcoin on those addresses that you have the private keys to, they don't require any territorial permission or governmental permission to move, to possess, to transfer, it's absolutely permissionless and owned only by you and no one else. This is what Bitcoin enables to everybody. And I have to say something on top of what we just talked about, Stefan, which is very, very important, because some people might listen to this and they're like, okay, so I should sell everything I have and put it all in Bitcoin, right? This is what a lot of people conclude, and it is the correct conclusion. It is, logically speaking, like Saylor always stamps on, from an engineering perspective, it is absolutely the solution to the store of value problem. However, there is, everybody in this world is in a different circumstance, is in a different stage in their life, and they have different problems to deal with, and they have different financial situations they're in. There are different ages and so on and so forth. And because of its youth, Bitcoin is still at a stage where it can act quite aggressive when it comes to its purchasing power on a short-term basis, right? So you can't get to this conclusion and say, okay, Bitcoin solves this problem, so I'm going to buy only Bitcoin, and I'm going to put all of my money into Bitcoin, and I'm not going to do anything else, and I'm just going to spend the Bitcoin whenever I need to, right? Great decision. However, if you have a loan that you need to pay off, and you actually need your Bitcoin for that on a monthly basis, or if you have expenses for your children and you have regular expenses in dollar denominated that you need to cover, right? Then you cannot count on your Bitcoin, because the Bitcoin has an exchange rate relative to the currency that you use for all of your expenditures that you have in your life, that is very volatile, right? So we have to say this to everybody, that even if I talk with this tone and I am all in Bitcoin, I don't own anything else, I do not, if you are an elderly person or if you have a lot of debt that you need to pay off and you can barely make it, I don't recommend you go all in Bitcoin, right? You should probably have some cash in dollars or in euros or whatever your fiat currency, home fiat currency is, in order to have the buffer that you need to stomach the volatility, one. Two, to actually weather a crisis that can happen anytime and be able to sustain your cost of living and your expenditures on a regular basis, right? Because if you're all in Bitcoin, you might get very nervous if the price dumps, and you might actually sell at the worst time, right? Which is something that happens to a lot of people.
Yeah, no, and that's very well said. And again, I couldn't agree more. I think that's a very important piece there that you mentioned, because I think there's a few components there. I think one is, as you said, being smart about it, because Bitcoin is the superior asset, but like you said, is very volatile. And I think that volatility right now is also a feature, not a bug, right? Obviously, if it wasn't volatile, we wouldn't experience the amount of growth that we have. But as it can go very volatile upwards, it can also go very volatile downwards. We're seeing that even today, right? It went from a high of 105K a month ago to now we're in the low 90Ks again, which is volatile. But that's what I also always tell people is like, Bitcoin has to be your long-term savings, right? One, you shouldn't necessarily put money into Bitcoin that you expect to flip a profit in the short term. And also, like you said, you should also have some, ideally either, some cash saved or some type of income that you can live off of, that can sustain you, that you don't need to sell your Bitcoin. And that's a very important aspect, like you mentioned. And then I think also the other component that is you've alluded to as well is just the education portion as well, because I think I see this a lot, friends of mine, family, who buy Bitcoin because they buy into the hype and Bitcoin's price is going up, and so they want to buy Bitcoin, and I tell them, yeah, do it, it's a good idea. But as soon as the volatility comes back in towards the downside, they start to freak out because they don't really, understand what it is or what the value truly is. And it's people like myself and yourself who have done the research, who have tested alternatives, that understand the long-term value and understand that, okay, this is something you just have to weather as long as the value proposition stays intact, right? And so what advice would you have for people who do kind of enter the space and are maybe not super informed yet on what Bitcoin is, and because it can be a complicated thing to get started with as well, right? Bitcoin is a very multifaceted asset that can lead you in a lot of directions. So where do you point people to get started to in the beginning?
Yeah, so basically what I usually do, I'm sorry, there's a flying around my camera all the time, and it's really annoying. So what I advise people to do is to basically, and this rule does not only apply to Bitcoin, it actually applies to every asset class out there, right? And since this asset class actually, or any asset class, is something that you are putting your money in, right? You need to understand that relative to your everyday life, it will change in price over the short term, right? And you need to understand why. You need to understand why it's moving, and why it's moving down, why it's moving up. And you need to understand its long-term trajectory. And you also need to understand its fundamental value, right? Fundamental value is, why is a person who has a lot of money buying Bitcoin, right? Why? What makes them decide? And I'm just one example. I told you about my journey, which fits perfectly to your podcast name, Bitcoin Journey. My Bitcoin journey is the one I just told you. I just told you why I bought Bitcoin. And this is a fundamental reason and it does not talk, or it does not explain the volatility of Bitcoin. It explains why I bought Bitcoin, right? And if you conclude that more and more people, investors like me, are out there, and they will over time conclude the same because of the logical consequence that Bitcoin is a better form of money, you will realize that over time, more and more people will buy this thing. And this thing, because of its limited supply, will go up in price at some point. It will, right? It's just a question of time because the knowledge has to spread over time, right? However, it does not mean that there is not traders out there like my old clients from back in the days who believe they can make money by trading this thing over the short term, by leveraging it, by buying and selling it over the days, weeks, right? Instead of buying it and holding it for the reasons I do, right? I am a type of person that is never going to sell his Bitcoin. Never. I bought my Bitcoin to hold it forever. I don't want to own anything else, right? I'm going to spend it whenever I want to, but I'm never going to sell it at a profit to hold what? To hold dollars? No, I'm not going to do that, right? So I'm just going to maybe live on it, but that is it, right? I'm going to spend it, which is not considered selling, right? But there is people out there who still don't have this knowledge and who don't have this conclusion, who are going to speculate on this thing. And that's also part of the journey. It's a good thing, right? It actually attracts money into the network because everybody actually enters Bitcoin for speculative reasons at the beginning before they get into this conclusion. I also got into Bitcoin at the beginning, like before I got this experience, before I had this experience, my first Bitcoin that I bought was not because I understood it. It was because I thought I can make money of it. Short term. I thought I can buy it and in 1 year, maybe I will sell it, you know, and now I can make a buck of it. You know, this is the main motivator to get people in. But the longer you stay around and you understand the asset class, the more you understand that you actually are dealing with a bunch of psychopaths who have an understanding that actually are never going to sell no matter what. Yeah. You know, and you can see that on Bitcoin. You cannot see that in any other asset class. You cannot see that in the stock market. You cannot see that in the gold market. You can see in the Bitcoin market how Bitcoins are sold and when they are sold, because everything is transparent, right? And data shows us that the majority of people are here for the long term, but the price volatility is caused by short-term traders, right? So I would point, and to answer your question, I would point people to podcasts like yours and other podcasts and books, and really educate yourself about what you own. Even if it's not Bitcoin, educate yourself or experience it. You know, I had to experience it. I also learned through reading, but a lot of people also have to experience it. Just buy gold and just a little bit of gold and see how it does, right? Yeah. Hold it for a year and you will see it barely moves, you know? Mm-hmm. It doesn't move much. It has also its benefits, right? It's private and stuff like that, but it doesn't perform as well over Bitcoin, and it has all its downsides, right? So my advice to everybody is study this topic, listen to podcasts, read books, buy some Bitcoin, and don't go all in at once. Start small and study it, and go gradually in, and go as you learn. You know, this is what most people should do. You should not go all in and just, you know, you're going to get cold feet if you do that. You're going to sell everything once the price goes down. It is the worst thing you can do, to go all in without any knowledge. So starting with a little bit of Bitcoin and learning is the best way, in my opinion.
Yeah, couldn't agree more. That's great advice. And I think another important aspect, and I want to get also a bit into 21st Capital, but we talked a bit earlier about how Bitcoin is one of, if not the only assets that you can truly possess. But in order to do that, that also requires you to take self-custody of that Bitcoin, because if you're leaving it on an exchange, then you're again subservient to the exchange. And if they cut you off, or if they limit your access, or whatever may happen, we've seen exchanges melt down, a bunch of other bad things happen. And so self-custody is a very important aspect of Bitcoin's value proposition. And nowadays, especially we're seeing the ETF pop up. And so there's becoming more and easier ways to not truly self-custody Bitcoin. And so I'd love to hear a bit about your perspective on self-custody, and of course also the motivation and inspiration to start 21st Capital.
Yeah, really good question. So I personally and my entire team, we value the sovereignty part of Bitcoin as its main value proposition. There is still going to be people who buy a paper Bitcoin, not the real one, which is absolutely fine, absolutely okay. And it's absolutely legit to do that. It's better than having no Bitcoin, right? However, we believe that if you really want to own Bitcoin truly, you have to take self-custody. And taking self-custody is actually going to make you understand Bitcoin better, right? It's actually going to make you understand really what Bitcoin is. If you don't self-custody Bitcoin, and you have your Bitcoin on an exchange, and you have your Bitcoin in an ETF, I'm really sorry, but you still don't understand Bitcoin, in my opinion. You don't. Like, you have to experience self-custody if you want to understand Bitcoin. That's number one. So it's an educational thing that we believe people should do in order to understand why Bitcoin is valuable, number one. Number two, if you want to actually send your money anywhere in the world without any permission, you can only do it if you self-custody Bitcoin. You cannot do it if it's in an ETF. You cannot do it if it's on an exchange, because you need the permission of the exchange, right? And also, if you actually care about Bitcoin's scarcity, then you should also do self-custody, because the more people don't do self-custody, the more we run into the risk of having too many exchanges holding too many coins. And that can lead to bubbles, because these exchanges start to, they start to abuse their power, and they're going to start to lend your Bitcoin, aka FTX, aka Binance, aka even Coinbase, and trade with your Bitcoin, right? And that's the old game that fiat bankers have been playing on us for the past 50 years, and we know how it ends, right? But here in Bitcoin, there is no savior. There is no central bank to save these banks. So if they go bankrupt, they're going to take all your money with them, right? So that's another reason to do self-custody. However, self-custody, Stefan, comes also with its trade-offs, right? What is the trade-off of self-custody? The trade-off of self-custody is that you are absolutely the only one who is responsible for your Bitcoin. If you mess it up, it's over. There is no way to recover your money if you mess with your Bitcoin wallet. And that scares a lot of people. And it actually scares a lot of people for good reason, because we've had a lot of people losing their Bitcoin. And believe it or not, and this statistic is going to blow you away, most of Bitcoins that are lost are actually not due to hacks. They're due to user error, because people don't know what they're doing. They do self-custody and they don't know what they're doing. They lose their keys. This is a lot of scammers use this statistic in order to get people's Bitcoin, right? But, you remember Alex Mashinsky from
Celsius.
From Celsius was using this statistic in his favor, and he was saying, why do you promote self-custody? People are going to lose their Bitcoin. They should instead keep their Bitcoin with us. And look at Celsius today, right? So that's not a solution. You should not trust a scammer and not do self-custody because you have the risk of you losing your Bitcoin, right? So there is a much, much better way today. And this is what we do at 21st Capital. We actually are doing consultation on custody for years now. I've been doing it for the past 5 years already. My partners do the same. And the number one request we get or we have gotten in these years is people come to us when they have lost their Bitcoin. People come to us when they don't understand how to do self-custody because it's such a difficult task. It's such a risky task. If something goes wrong, they lose everything, right? So we got together at 21st Capital. Our team got together and what we do is we provide a very, very secure and safe environment to onboard people into self-custody in the most secure and self-sovereign way with methods that no matter what they do, even if they lose all of their keys, they can recover their Bitcoin. And we use the latest technology called mini scripts, thanks to Taproot. And, the way we do that, and I don't want to become too techie or too complicated, I'll just use a metaphor to explain this very, very simply. Imagine you have a car accident, right? A car accident can happen, right? You cannot do anything about the accident. If it wasn't your fault, your car is destroyed, right? And either you take full responsibility and you have to buy a new car and you have to pay for it, or you have to repair your car and you have to pay for it from your own pocket and it's your loss, or you have an insurance that actually protects the situation and helps you get your car fixed or helps you buy a new car and covers you, right? A similar method is used here, what we use with mini scripts, which is called safety nets or smart backups, or we call it rescue service, right? And the rescue service, the way it works is, think of it of doing self-custody, right? You do your self-custody with a normal private key. You have a hardware wallet and you set it up, for example, with a ledger, right? You set it up with your ledger and everything is fine. But then you actually have a second device that you give to your mom, that you give to your sister, that you give to your brother, you give to anybody that you trust. And you actually don't have to trust them completely, and I'll tell you why. So you give this key to them, and what you can do now with mini scripts is you can time lock this key for the future.
Yeah.
What does that mean? That means that if you lose your key after some time, because you're not moving your coins, the Bitcoin network will know that you lost your key, and that second key gets activated, right? But as long as you refresh your Bitcoin every once in a while and you show to the network that you're still around, that private key, that second private key that you have with your heir or with your brother or whoever you trust, gets time locked again into perpetuity, into the future, right? So you put the time lock for 10 months, and every 6 months you refresh your Bitcoin, and the 10 months clock restarts and restarts and restarts. And that way you always have this protection that even if you lose your key or your keys, if you do multi-sig, right? You always are going to be able to recover the money with that single key that you have with your heir. And then you can add another layer with our company, for example, where we can actually do a rescue service in case your heir also messes up his key, right? But while you're still around, while you are still having access to your keys, none of these parties can actually, none of them can actually ever see your money because they need the vault. The vault is only with you. But they can also not sign because their keys are time locked, right? So that way you have all of the keys, you have absolute control over your Bitcoin. But if you lose it, you can still recover it.
Yeah. Yeah.
And we truly believe this is the solution to the trade-off of doing self-custody. The solution is not trusting a Celsius company to take your Bitcoin and lend it out and give you interest. That's not self-custody. That is absolutely disastrous because you don't own the Bitcoin, they own the Bitcoin. Yeah. And the reason they can pay you this interest is because they're trading with your Bitcoin, or they're lending it out and they're taking money from somebody else to pay you, right? And we know what happens at the end of this, right? At the end of this game, they go bankrupt and you lose all your Bitcoin, right? So the solution is not that. The solution is you do self-custody, but you build safety measures in case you lose your Bitcoin. And that way it turns your self-custody system into an absolute bulletproof system that you can never lose your coins.
Yeah. Yeah, no, and that's very interesting because I know obviously there's been a lot of experimentation around custody and the different custody solutions because there's still a lot of work to be done, I think, with the time lock. That's a very interesting way of, as you mentioned, you know, kind of securing that backup and adding a bit of redundancy into the system. For at 21st Capital, is it in terms of the services, right, setting up the wallet and building in this redundancy, but is it also collaborative custody? So are you setting up typically multi-signature vaults? Is it still signature?
So before I dive into this, a very, very good question, Stefan. Before I dive into this question, I have to say one thing. Everything we do, Stefan, is actually just a service around this technology. We don't own this technology. We don't even own the software. The software is open source. You can go and download it on our website and do this completely on your own, right? All 21st Capital is doing is help you to do this securely and not mess up. That's it, okay? And on top of that, what we do is we offer you a collaborative custody model, what you just described, with you as the majority key holder, right? So what we usually do, Stefan, is we do a basic configuration path, right? Which is the basic wallet configuration, which is your base layer, right? And we usually do a 2 out of 3, right? So you have 2 keys, we have 1 key, okay? And you keep your second key at your bank. And even if your bank is compromised, they cannot do anything with that key. And you keep your second key at home or wherever you are in your office. And you have another key with us, right? That's the base layer. And on that base layer, it's already amazing because even if you lose one of your keys, you still have us. We can co-sign with your second key. But then if you lose both keys, you have a problem, right? Or if you didn't actually protocol everything, what you did, you have a problem, right? And you don't have any heirs that can access this if they don't understand what you did, and so on and so forth. So here's what the layer 2 and layer 3 come into play. You build a layer 2 for your heir, your son, your brother, your sister, whoever, right? And you give them 1 key, only 1. And if this multi-sig is messed up and cannot sign and doesn't sign, it's always going to be active, right? It's always going to be active. It's never going to get deactivated. But if you do not sign with this base layer for, let's say, 8 months, you can pick the time frame that you want to time lock the second key or the second configuration. And that key of your mother or of your heir can now sign. So actually the multi-sig turns into a single sig.
Okay.
And then you can add another layer for another heir. And you can add another layer for one more heir. So you can add as many layers as you want. You can give them each 1 key, and they will all be able to access your funds if you lose your keys. And then you can add one last layer, last resort rescue layer, where you can add us as your rescue. So if everything is messed up, if everybody loses everything, we can still rescue
Yeah.
the person. That's what we do.
Yeah. Oh, super interesting. And I think, yeah, an incredibly useful service, I think, because, yeah, that's something that I've also wrestled with a lot, especially when, I've been in Bitcoin now for, almost, 7 years. So I'm obviously pretty well versed with self-custody. And I mean, but even then, still, I sometimes think of like ways that, my own setup could be compromised. But I think especially for beginners, it's a lot. Self-custody, as you said, can be very challenging. And that's why I think that solutions like yourselves is a very, very good intermediary between providing that self-sovereignty, that self-custody, but still having a third party there that doesn't have control over your funds, but can help you, can guide you, and can make sure to build in systems that will offer, redundancy, because I think we all make errors. We're not all, immune to making faults. So yeah, I think it's super great what you guys are doing, and I'm curious from your perspective also to hear like what are your expectations, going forward into the future, and how do you see this space in general also just developing?
I think, Stefan, to be honest, I see the next 5 to 10 years, a lot of companies building on top of Bitcoin, and the most successful ones will be the ones who build solutions around the store of value aspect of Bitcoin.
Mm-hmm.
And the reason why I say that is because of the timing the market is in, right? We're not at a stage in Bitcoin's adoption curve where Bitcoin is a good medium of exchange.
Mm-hmm.
Let's be honest, it sucks as a medium of exchange, and it's fine that it sucks as a medium of exchange because it's just too volatile in Western countries. Obviously, in countries where the currency is completely down and hyperinflated and completely abandoned, and you can barely access funds because the banks won't open accounts for you, Bitcoin is the best solution there, right? So it also depends where you go, right? In some places, Bitcoin is already a good medium of exchange and a good currency, but in Western countries, it's not very useful because we have banks, they are still not censoring as much. It's fine. We're doing okay, right? We're not at this stage. So I believe in the next 5 to 10 years in Western countries, you will have a lot of companies like us who build solutions around custody and around the store of value part of Bitcoin.
Mm-hmm.
And
Yeah.
they're going to use technologies like we do, and they're going to build services around these new technologies, and it's going to expand into an industry that is unbelievably early. We are at the beginning of the internet here. I believe we're in the 90s of the internet. You have the Amazons and the Apples and the Windows, and nobody cares about them. Everybody laughs at them, and they're building and building and building. And at some tipping point, there's going to be a massive adoption coming in, and competition is going to pick up. And yeah, it's very hard to say what kind of services are going to be built around Bitcoin. But the one I can be sure of is better custody, right?
Yeah.
For example, what we do, I don't, and I welcome new companies to come and build in our on this technology we are working, because it's going to also legitimize it and actually familiarize people with the technology so they're not scared, right? Because we know that this works. We know it's bulletproof. We know it's actually helping, or it will help individuals. But people are scared because there's still no widespread adoption, right? That's the thing. So the more companies or banks or institutions use custody methods like us, or even the same software like we do, we can actually say, hey, you know what? You can do your collaborative custody with us, and you can have one rescue key with us and another rescue key with someone else.
Yeah.
right? So it's going to help everybody. I welcome new companies to build in this industry. It's going to strengthen everybody, like the internet protocol. The more people come online, the more it's going to help
Yeah.
other online companies.
Yeah, fully agreed. And I think you're exactly right. Like I think over the coming years, we're going to see a lot of talent come into the space as well. People who are looking to build on Bitcoin. We're going to have advancements in a lot of different areas of the industry. And I think self-custody is going to be one huge area that's going to continue to improve. Because like you said, I agree. We're still very early days. A lot of the interface is still a bit clunky and not super easy for people to understand. But obviously, companies like yourselves are making that progress possible. And so I know we're out of time here, but I just wanted to open up. Of course, I'll include the website in the show notes. I highly recommend people to check it out. And yeah, collaborative custody as a solution, I think, is for me the best option for most people right now. But just wanted to open up for you for any final thoughts or anything else you want to mention.
Yeah, so as you said already, if anybody wants to come and follow us, we are on Twitter at 21st_capital.
Yeah.
I hope I'm right. I hope I'm right, but you can put it in the show notes
Yeah.
for the audience. So we're definitely on Twitter. My handle is at RKBTC on Twitter, and obviously the website is 21stcapital.com. And yeah, the Twitter handle I just checked is 21st, so 21st_capital on Twitter. And the website is also very simple, 21stcapital.com. If anybody's interested into using the software or anything, you can just book a demo with us. We're going to show it to you. Even if you want to do it on your own and you don't want to pay us to help you, it's absolutely fine. Just come on our website, come on 21stcapital.com, schedule a demo. We're gonna show it to you. We're very excited about this technology. We really believe it's finally solving the problem of self-custody and its trade-offs. It's finally here. I truly believe this is the solution to finally do secure self-custody without any of its downsides.
Yeah. Agreed. And yeah, again, I highly recommend my listeners to check it out. You guys are doing great work at 21st Capital. RK, I appreciate your time today and all of the insights as well. I really enjoyed the conversation, and I'm sure my listeners will as well.
For sure. Stefan, thank you very much for the invitation. Thanks for having me, and have a beautiful day. Thank you. Thanks for
Thank
having
you.
me.
You as well.
Take care.